This is Terry Kauser. I probably had about 10 people repeat the same inaccurate information today alone, and it prompted me to want to send you this quick message. Number one, do negative items get deleted from your credit report just because you pay them? That is false. Now, can a creditor agree to remove an item because you pay it? Absolutely. But does the law say that negative items get removed because they have a zero balance? That is false. Number two, do negative items get deleted just because you dispute them? That is also very false. Is it your right to dispute everything? Yes, it is. But credit repair, when done properly, is not just sending a bunch of frivolous form letters to the credit bureaus. And number three, just because you get negative items deleted, that does not mean you have good credit. You can still be denied because more goes into an approval than just negative items. So stop letting amateurs work on your credit report and make matters worse, and contact an expert when you're ready for real results.
What's going on, everybody? Hope everybody can hear me. Welcome back to another wonderful episode of our Village in Action web series. It is Tuesday, August 4th. I think today is Obama's birthday. I haven't been on social media much today, but I think former President Obama's birthday is today. If it is, shout out to the OG. It's great to have had the first Black president, and I'm certainly sure it will not be the last. But tonight, we just kind of want to talk a little bit about credit worthiness, the importance of having credit. I believe in the Black community specifically, we have not been given the right tools necessarily around credit. If you think about how you were educated with credit, think about high school. Did you have a class where you talked about credit? In grade school, did you have a course or a teacher who talked about their taxes? I'll tell you, my first introduction to a credit card was my freshman year in college. They set up these tables with free giveaways outside of the student union. And I'll tell you, everybody Black and everybody brown was running to get something free. It was a free t-shirt, a free hoodie, a free ball cap. Maybe it was a gift card, right? And all we had to do was sign up for these credit cards. And I had no idea what a credit card was. And as I'm talking about credit cards, I do want our guest tonight, Osarimi and Derek, to go ahead and unmute and to turn on your videos. It's grateful. It's a great thing to have two of them here tonight. They're our credit gurus, our credit specialists. But getting back to that story I was telling y'all, my freshman year, I got my first credit card, and even when they passed out the credit card to me, it wasn't anything that they even told me how to use it. They didn't tell me about interest rate, APRs. They didn't tell me about when to make the payments, how I can do automatic payments. None of that. All I knew was I had a card, the ability to go into a store, buy merchandise that I didn't have in my a way to pay for it. And then they said, oh, you can pay for it later, right? Well, pay for it later turned out to be a biggest mistake and a big headache for me later in life, because you're incurring all this interest rates, and then you miss a payment, and then it's affecting your credit score. And then it's just a downward spiral of bad decision after bad decision after bad decision. And it just seemed like credit was just this thing that I should run from, or something that I didn't even need. But tonight, I want to talk about a little bit of all of maybe some of the bad decisions that we may have made related to credit, the importance of having credit, right? And how we can help credit be used for our good, as opposed to credit being used for our bad. I think many times we don't even know how good it is to establish credit. And so I want to talk a little bit about that tonight. So I've got two credit gurus on tonight. Derek Smith, sir, it's good to have you on the call. Osarimi, can you hear me, sir? I see Osarimi, he hasn't responded yet. Hey, Derek, can you hear me?
Man, I can hear you loud and clear, man. Can you hear me okay?
Yes, brother. I'm envious of them glasses, man. Them things is fresh.
I appreciate that, man. Thanks for having me.
Yeah. I appreciate you being here, being able to share something with the community Derek, tonight, just really about credit. Before we kind of get into credit, man, let's just talk really quickly about how you even got into this work. Because very, very rarely do I see people of color who are in the credit world who are able to articulate and explain the importance of credit. So talk to us a little bit about how you even got into this field, brother.
Yeah, man. I'm a Washingtonian, man, and been in Prince George's County all my life, and got to a place, man. I was fortunate enough to graduate from college, man. HBCU, went to Maryland Eastern Shore University, man, and I graduated from college, and I was making, I had about $50,000 worth of school loans, and I met a guy, man, and he told me, at what point do I feel like a $50,000 job is not going to allow me to pay off $50,000 in school loan debts? And he asked me one question, man, that really changed my life. He asked me, do you think you're worthy of making six figures or better? And I said, absolutely. So he introduced me to real estate, man, pretty young. At 25, he kind of took me up under his wing. I went out, did some amazing things here in Prince George's County, man, Rookie of the Year and all of those things. I was excited, and little did I know, but I wasn't surprised that I did make six figures my first year in real estate. And I went on, man, a couple years later. I opened up a RE/MAX office. I opened up a RE/MAX office here in Maryland, man. I was 29 years old, and I just was excited about that. Became president of the Real Estate Association for a couple of years. And being in real estate, man, all my income was tied to me having credit-worthy people in my life. Individuals might make decent income, but unfortunately, if they don't have, at that time, a 640, 660 credit score, they couldn't qualify for a mortgage. And so I got to a place, man, where I started turning a lot of people away, man. A lot of people saying I'm making 70, 80 grand, 100 grand, whatever the case may be. But that divorce happened, that bankruptcy happened. I lost my job or whatever situation may be. And I had to deny a lot of people. And so I got introduced to this space on the credit repair, credit restoration side, because I had to find a safe haven place to be able to incubate these people who were not credit worthy. And so I started working with this company in 2012. They were just a resource, man, servicing all of our unqualified people. And they were getting these people credit worthy, man. They was getting them credit worthy, sending them back to us. And in a short period of time, we was fortunate enough now to be able to, help these individuals become homeowners. And then a couple years later, man, they asked me to start working with them on a corporate level to build out some teams of people across the country. And I said, if I get out of the industry, maybe I can service it as a whole. And so now I work with a lot of mortgage companies, a lot of real estate brokerages, and kind of, my mission, man, is I'm still in real estate, but I'm on the front end of that transaction. People with bad credit need love too, because the number one thing most people with challenge credit hear the most is you've been denied. And somebody to work 8 hours a day, 40 hours a week, man, to keep getting turned down for things, man. I mean, somebody with challenge credit, when they go buy a car, man, they're in a car dealership 2-3 days, at a time, right? Somebody that got good credit, man, they in the car dealership, man, for an hour or two. I'm getting out, I'm right there, keep it moving, I'm out of there. And so that's just really my commitment, man, to see to it that people can walk around and not be content with challenge credit and just be that resources to get people back on track. You feel me?
Yeah, Derek, that's big, man. I tell you that a lot of people who have bad credit, and I've been there. Yeah, I know what it's like. You try to avoid it. You try to avoid all the letters that come into the mail asking you to make this payment to this third-party creditor, right? This third party who's taken on your credit through whoever you owed in the past. You stop making payments, and you just hope that it's going to go away, and it doesn't go away. And then you start to think to yourself, maybe I don't need credit, right? So tonight, I definitely want to talk through the success that you've helped your clients in buying homes and other things that they had to use credit for. I think that's so vitally important. Osaremi, hey, sir, can you hear me?
Yes, sir. How are you?
I'm well. So, hey, it's great to have you on the call tonight as well. If you could just talk a little bit about how you even got into this work. Derek just finished talking about his kind of introduction into this world. I was just sharing with him that very few times do we see people of color who are in positions like you and like Derek. And so how you got into this work, and then what your passion has been these last couple of years as you've been helping clients.
Thank you. I really appreciate you inviting me to join. Certainly means a lot to be able to share a wealth of knowledge and share my experiences. I work in commercial lending, specifically helping run a CDFI, frankly 2 CDFIs for a national nonprofit, primarily making loans to small businesses and small business owners through the entire capital continuum, from micro loans for $5,000 to large dollar loans exceeding $5 million for both startups and existing businesses. I got into this industry not because, frankly, I knew about it, but just because I was dropped into it. Someone taught me, showed me the ropes. I learned and picked things up fast, and it's just been going from there. Went to school for finance. I got a degree from St. John's University here in New York, and I started my career with one of the largest CDCs in the East Coast, making government guaranteed loans to minority-owned businesses in New York City. So I was working with a lot of startups with an idea and a dollar. And needed the capital to help them just get started, whether it's a restaurant, whether it's a bar, whether it's a gym, whether it's the e-commerce business. I was tasked with, as a credit analyst and a loan officer, to help them obtain the financing that they need while doing it under the SBA and the government programs. I then went on to join a small bank in Midtown Manhattan, doing larger dollar facilities for primarily hotels and primarily gas stations. Did that for a year, didn't love it, but I decided that my true passion was lending and creating capital and an ecosystem in minority areas and minority neighborhoods or underserved communities. Been a minority myself, and growing up in an underserved community, I do understand the need for capital. So I decided to join National Development Council, probably one of the oldest nonprofits in the country, over 50 years old. And I helped run again two of our CDFIs. One focused on lending government guaranteed loans, specifically SBA 7A, and over the last couple of months, PPP. And also a second CDFI that is in its infant stage in raising money here in the East Coast, as well as in the West Coast, but primarily here in New York and Florida, Cleveland, Atlanta, St. Louis, and that area, just making small dollar loans. So it's my passion to really educate and to really help bridge the wealth gap through business ownership and business lending. And I hope that I can provide whatever background and information that can help the folks that are listening today.
Yeah, I appreciate that, Osaremi. And Derek, also great introduction. For the next 45 minutes, gentlemen, I just really want to have a great roundtable discussion. Imagine that we're both, all three of us are at the dinner table, just really talking through some of the importances of credit, how to establish great credit, some of the pitfalls to watch out for, and then how we can use our credit to leverage some of the things that we want to be able to do in our life. I think that's vitally important. Derek, I do want to pull up, you did send me a slide, a couple of slides that I want you to talk through, and then we can kind of get into some deeper conversation. So as I pull this up, Derek, let me know which slide you want me to go to.
Okay, cool. You can keep it going. Good, keep going. Yeah, so let's stop right there, right? We can spend a few minutes just talking about the credit bureaus really quickly. People see the word bureau and they think that they're government agencies, and they're not. They're privately held billion-dollar companies who do not verify the items before they place it on your credit report. That's why oftentimes you pull your credit report, you see addresses on there for places you never lived. You see things on your credit report that you paid off, still showing outstanding balances. A lot of times, man, the credit bureaus, they pay fines every year because they fail to update consumers' credit profiles. And why this goes overlooked a lot of times by consumers is the fact that most people don't even check their credit report. If you ask most people, you have any idea what your credit score is, most people say no, or even I don't even want to know. And so just imagine you walking around and people making decisions about you based upon a 3-digit credit score that you have no idea what it is. And so the credit bureaus, they make their money by selling your information to third parties. This is why we get so much solicitation in the mail, right? You got great credit, you get offers to buy cars and timeshares and get credit cards and all those things. If you got bad credit, you get solicited too, though. It just look a little different. Freedom, debt relief, debt consolidation companies. You wonder how in the world these people know my situation, because the credit bureaus sell your information, third parties. And so just recognize that they're not our friend. They make their money by, if a loan officer pulls your credit report, they pay for that report. If you go in to buy some new furniture and they request a small hit credit profile, they pay for that. And so that's how they make their money on that side. Click it through one more slide. Matter of fact, one more. One more. Is it, you see that pie chart? It's a pie chart. Should be a pie chart in there somewhere. Nah. It's a pie chart to show you how your credit score is. Nah, go back.
Did I miss it?
Yeah, it must be.
Maybe I moved too fast.
Yeah.
Look, you got a lot of good slides in here, though.
Yeah, go back. I don't know where it is, but I just it's a little pie chart. It's a graph in there, but I don't know where it went. But just really quickly, man, 35% of your credit score revolves around your payment history, and so it's really, really important that people understand that a late payment will crush you. I know my man, he'll talk about it on the lending side, but if folks have late payments and those things like that, it really, really impacts your score. So we got to make sure we paying our bills on time. Another thing I think is important, if you know you're going to be late, you might need to call your creditor or debtor and ask them to change your due date. You know, those things are really, really important. 30% of your credit score revolves around your debt to income ratios. And he'll talk about that, I'm sure, on his side. But most people don't realize once you exceed 30% of that available balance on that credit card, your score takes a big hit. You don't even have to pay down those debt obligations to a zero. You just got to keep those balances below 30%. So if you got $1,000 limit on that credit card, man, we got to keep that balance below $300. That's really important. That's why a lot of people say, I don't know why my credit's so bad. I pay all my bills on time. But if all your cards are maxed out, this is the issue. And so, you know, just know that we got to make sure we do that. 15% of your credit score revolves around the length of that credit profile.
All right, hold on, Derek. Let me bring you back because you're saying some real good stuff. Let's go back to the first number. You said 35% of your credit score, you said revolves around, say it again?
Your payment history.
Your payment history, your ability to pay that particular bill on time. And if you can't pay on time, you can call, right? And you can set up a different due date, or you can, right?
Yes.
Am I right about
Absolutely.
that?
Yeah, it's important to be proactive because most people know when their bills are due and when they get paid. So you already know if you're going to be late. You know, I think we're in a society where we're running from our creditors when they call us, but sometimes it's okay to answer that phone and have a conversation with them, especially if you know you need some grace from them. You see what I'm saying? Mm-hmm. Transparency wins sometime, and just say, look, I'm gonna be a little, my paycheck was a little short. I'm gonna be a little late. Can you change my due date so you don't have that 30-day reporting on it being late or 60 days late? You feel me?
Okay. So the other 30% is based upon keeping your balance below 30%. Is that correct?
Absolutely. So that $1,000 credit card, you don't got to pay it down to zero. Pay it down to $299. It's all to the good. Another thing that I think you can do strategically, right? Let's just say you know you're about to go to Marshalls or TJ Maxx, and you know you're about to spend $200. Mm-hmm. And they offer you a credit card. If you apply for the credit card today, you're going to get 20% off.
Right.
20% off is $40. Go ahead and get the credit card. You got the $200 that you was about to spend. Put your clothes on the credit card and then go home and then make that payment of $160. So now what you just did was you took the cash that you had available, you saved $40, but now you exercise some sense of financial responsibility. But now you have a credit card with a low balance. And now every time you go to TJ Maxx, instead of using your money, use the credit card, then use your money to make the payment. So therefore you stay below that threshold, but you're getting mileage because of the utilization in the payment history. You feel me?
Mm-hmm. Mm-hmm. And then you said the 15% was how long you've had a particular particular credit card, right, or a line of credit. So for instance, if you're trying to buy a home tomorrow, right, and you have lines of credit on your credit report that's less than a year old, isn't that a ding against you?
I mean, it's not necessarily a ding, but you know, when we talk about seasoning, we want to be able to see that there's been a period of fiscal responsibility. Because if I'm looking to loan you money, man, and I don't care if I'm giving you $5,000, and I see that a couple other people loaned you $5,000, but that's fairly recent. It's different if you got a long-standing history of a couple people 5-6 years ago, 10 years ago, loaned you $5,000 and you paid them back. And so we want to get to a place where we want to be able to establish that length of history because it does impact that score. Obviously, a lot of people, especially our millennials, don't even have any trade lines at all. So they got to start somewhere. But most older people typically, when they pay something off, they go close those accounts because they don't trust themselves. And so I would rather you take the credit card, ask the kids to hide the credit card so you don't use it. But at the same token, if you got a 5-6 year credit card, it works to your good. And that's why too, man, sometimes if you got people, your mom or your dad or whoever, and they got a credit card that they had for years and they maintain a low balance, they can add you as an authorized user on that credit card. You just got to make sure that they're responsible and they're staying below that 30% because it can hurt you, if they mismanage their financial access with those cards, for the most part. And so that's kind of how that works on that. And then we got 10% far as inquiries go. Inquiries only really count towards 10% of your credit score. But if you're shopping for an apartment or you shopping for a new car within a 30-day window, it really doesn't impact you that much. And so just kind of keep that in mind. And then new credit, again, accounts towards 10% of that score. So you got the 35, the 30, the 15, and then you got the 10% inquiries, and then the 10%, new credit or credit mix. That's like your car notes and school loans and things like that. That's your credit mix. That's that last 10% for real.
Okay. Oh, so Remy, go ahead and chime in on some of the things that you've heard so far.
Yeah, I think I want to start by kind of looking at the big picture of describing why credit is important. And the key word you utilize, Dr. Jason, is leverage. And what exactly is leverage? I know that word gets thrown around pretty often, but I'm going to go right from a Google search on what leverage is. Definition is use borrowed capital for an investment, expecting the profits made to be greater than the interest payable. What does that mean? It's borrowing money at a rate that is lower than the return on the investment you're going to make. This is how capitalism works. That's how America survives. That's how banks operate. Banks borrow money from you because you put your money into a savings account, and they pay you 1%, maybe, if you're lucky. And they lend that same money out using leverage to you on an auto loan for 10%. So credit is important because the higher your credit score, the more leverage you have. And what that means is you have the ability to borrow at a lower rate so you can invest and build wealth. That is literally why credit is important. And I have a couple notes here on how you can establish credit. I look at the credit pool to be broken down into 3 different categories. One are people with zero credit, there are people with bad credit, and there are people with decent credit that are looking to increase their credit. What can you do if you have zero credit? Well, you have to start somewhere. And it's similar to what Derek is saying. It's as easy as opening a small credit card and using it. You have to use it. You can't just hold on to it and just have it there just for show. You have to use it and show that history of repayment. Get a credit card with a limit of $500 and use it for things that you can pay off within the month. Your Netflix account, your gas, your small groceries or food, $50 here and there, and pay it down as soon as you use it. You have the cash, all right? You have the cash available. Use the credit card leverage. And pay down as soon as you utilize it and build that history. And that's how you start to build credit. It's not that difficult. Obviously, the information needs to be available to people to understand and know what how to go about it. But yeah, that's how you start. That's how you start building your credit. I started building my credit in high school. A very horrible way through PayPal called Bill Me Later. Invited me to take a loan for $1,000. I think I was 18 or maybe even 17 years old. And I took the loan and I missed one payment. That payment is still on my credit report.
Really?
The only reason why I don't have quote unquote a perfect credit score. So again, use credit cards or use small advances. However, make sure you're paying, even if it's just the minimum you can afford, pay the minimum and make sure you don't miss a payment. The second is bad credit. And I've, working in small business.
What's the range of bad credit? Let's
I'll let Derek answer that question.
Okay. What's the range of good credit, bad credit?
Yeah, so your minimum credit score obviously 400 and the max out is 850. But everything over 720 is really considered very good credit. And so you want to kind of get to that threshold of 720 or better. And then, you really taking advantage of all the favorable interest rates and no money down opportunities and all of those things for the most part. Most people don't really realize, man, that even if you just get them credit card balances down, and work towards getting them late payments off, that'll really bump you up tremendously. I mean, especially folks too that got repossessions or bankruptcies, things like that. I just had a guy, we got a bankruptcy from 2016 off his credit report. His score went up 82 points just from that one trade line alone.
Wow.
I mean, that's powerful, man. Anything can be disputed if it's disputed the right way. The credit bureaus can't verify, they can come off. We'll talk about that later though.
And a lot of people say they have bad credit, and whenever people approach me, either for a loan or for anything, the first question I ask them is, have you seen your credit report? A lot of people have no clue what's on their credit report. And so how do you know when you have bad credit? How do you know what's on it? How do you know how to work on this? How do you know what to fix? So the first step is try to get a free copy of your credit report, right? It is available to you. Or when you apply for a loan, you can ask them to provide you with a copy of your credit report and see what's in there. Print it out, have a marker and a pen, and literally mark it and find the things that are inaccurate, and start calling those people and making sure that gets up your credit report. And the things that are accurate, just try to find a way to negotiate or try to find a way to pay them down. But the first step is to know what the problem is. Without knowing what the problem is, you can't solve the problem. So get a copy of your credit report and begin working from there. And those are for people with bad credit. And for people that want to improve their credit, continue to do what you're doing. Continue to make your payments as early as you can. But also upgrade your type of debt or your type of credit. I know a lot of people, for example, that have Chase Freedom cards, and they've had it for years. If you have a 680 score and you're looking to improve that, maybe go for a Chase Sapphire card with a larger credit limit, which you can show better history with and continue to make your payments. That will improve your credit score. I did it the same way. I had a Chase Freedom and I upgraded to a Chase Sapphire. That improved my credit because you have a larger limit, showing the bank your ability to pay back debt.
What about if you have a bunch of credit cards with zero balances and you're not using them? Does that hurt you or does that help you? Should you be using them and then paying them off, or just having them open because you talked about the life expectancy of a particular line of credit is sometimes good, right? So talk about that. You've got credit that you're not using. Is that good to have?
I think so. I don't see why not. I have a lot of credit cards that I don't use, but I also have a couple credit cards that I make sure I use. What the credit cards that I don't use help me do is keep my balance high, right? And I use the ones that give me points and the ones that that have rewards. Kind of as my daily usage, and I have 2 or 3 of those. And the other ones I just keep there when I need to make a purchase for Bloomingdale. I make that purchase, but I make sure I pay it down. So that might happen once every quarter or once every 4 months. So they're not sitting there just totally idle. I might use them once or 2 times a year, but I do have the credit cards that I use and I utilize pretty often. What the other credit cards do for me is just keep my balance high. And my ratio low, my usage ratio, credit usage low, under 10%.
Okay.
Yeah.
All right.
And I agree with him totally. I mean, look, utilization is really, really important because, at some point, if you don't use them, the credit card companies, they're going to lower your limit or they're going to close your card.
Right.
And so, if you really use credit cards and instead of using them and replacing money that you don't have, but you use them for your goods, you win. And I mean, look, if you're getting frequent flyer miles, you're getting free hotel stays, or whatever the case may be, and you got a credit card, you're about to go to the grocery store and spend $100. Go ahead, use a credit card for the $100 and then go home and then make your payment online bill pay. And so, if you're going to put $50 in your gas tank, use the credit card, then go home, online bill pay, and make a payment. Because the lender is saying, hey, listen, we make our money off of interest. Yep. But you're really not paying interest if you're not carrying a balance into a new month.
That's right.
Keep in mind, the interest that you pay is based off of accrued interest the previous 30 days. And so that means based on my average day of balance. So today, if I owe $10, boom, tomorrow I owe $20, boom. But if I'm using it and I'm paying and I'm using it and I'm paying, it's really on a revolving 30-day period of time. It's really no interest that I'm paying, but I'm getting those frequent flyer miles and all those things. And that's why it's important too, if you got credit cards, try to see what's the benefit for you for using those credit cards. What is the value? You getting any points, rewards, and all those things, because you can really use them the right way instead of saying I need $300 to use the card because I don't have $300. You know what I'm saying?
Yeah. Let me pull a couple of questions from the chat box. The first gentleman is, if someone has a teenager, Dr. Thomas just shared this. There's a teenager at home. She's starting to work with on being financially responsible. What advice can you give parents who have teenagers who are working on becoming financially responsible?
Man, I would go ahead and probably get them a credit card. You know, I got my first credit card when I was 18 years old in college. I saw a table with them T-shirts on it, man. I got this. Yep. How can I get a T-shirt? They gave me a credit card. I went to Neiman Marcus, man, and spent $2,000 real fast, you know, at a young age, man. And so I would say if the parent can really help that child be responsible, get that credit card and just manage it with them and help them keep that balance low. It's always good to really do that. You know, add them to one of your credit cards if the balance is low, you know, and just try to work through that. There's some practical things that you can do to help them establish credit. So by the time, you know, they get that decent job and they're ready to purchase a home, it's not like you're looking at a blank credit score, you know?
Yeah, I agree with that. I think helping them establish credit is good, and when they leave your house, leaving with an 800 credit score is good. But I think what's more important than that is building habits. And I think we got to start to, and this is what my mom did to me, was put me in charge of one bill. Make sure every month that's the bill that I take care of, even if she's giving me the money to pay it. But just the mentality that on the first, this bill is due and I have to make that payment. And making sure that I keep on top of that teaches you how, you know, to be an adult and how to keep up with your credit and make sure you build that credit and have the habit of paying back money that you borrow or paying bills. It's very simple. You can leave your mom's house and she's helped you build a credit of 800. And once you go, you don't really understand how that works. And you know, you miss the first 60 days of payment and your credit drops back to 600. And then you're back to square one. So although, yes, I agree, you should help them build credit, but you should also teach them the habit of paying back either debt or paying bills.
Yeah, that's good. Another question from the chat. Dr. Ward says that she's trying to rebuild credit to buy a home next year and relocate back to New York. And Derek, you mentioned earlier working with a client who had bankruptcy on their credit report. With bankruptcy, what can they do to take care of these things to increase the credit score?
Yeah, so what we do, we dispute all the derogatory items on the credit report, the judgments, the liens, the collections, bankruptcies. It really doesn't matter. And if the credit bureaus can't verify, they have to delete it from the credit report. It's the law. And so with bankruptcies, keep in mind, the credit bureaus are not in the verification business. You filed bankruptcy a couple of years ago. They got to go to your county, find out the date that you filed, find out whether or not the information on their reporting was accurate. They got to go through all those details. Can the bankruptcy come off quickly? I mean, it's possible, but give or take, it might take a couple of months, but we attack and we try to drill home and hold the bureaus accountable and bang them over the head where they get tired of it. And at some point they can delete it from the credit report. And so it doesn't matter what your past look like. Your past can be recovered. All things can be made new. If you have the right people disputing the things the right way on your credit report, it can't come off.
Yeah. Is that the kind of work that you do?
Yeah, so I'm the vice president for United Credit Education Services. Corporate is in Michigan. Been in business since 2004. And so I'm just in charge of a couple of different regions where I go and build corporate relationships and help individuals, reconcile their credit situation. Our program is amazing. We do some great work. We've been doing great work for almost 20 years. And so I'm excited to be a part.
Okay. What's your information? I want to make sure that it gets into the chat. Those who are listening, they want to reach out to you to restore their credit. Do you have an email? Do you have a website?
Yeah, absolutely. You can send me an email to brokerderrick@gmail.com, BROKERDERRICK, brokerderrick@gmail.com. And my phone number, by the way, is 301-744-7472, 301-744-7472. And our website is united-credit.org, united-credit.org. You can see some information there. There's an orientation video there. And yeah, feel free to reach out to me. We'll get you right. Our program is only $89 a month. No contract, no termination fee. One cycle of credit repair is 60 days. So every 60 days, we're going to be attacking everything on your credit report. You got your own login. You can log in and see everything that's going on. That was in some of those slides that I had up there previously. But you can log in, so there's full transparency in our process. You're not kind of left in the dark. And so, yeah, that's what kind of glimpse of what we do, man.
Okay, good.
If I can piggyback on what you said, Derek, about the bankruptcy and taking out the credit report, I think from a lending perspective, yes, that's super important. Yes, you want to get it out off your credit report. But again, it goes back to habit. When as a lender and a loan officer, credit analyst, when I'm looking at a file for a loan, I will find that bankruptcy if it happened. even if it was 30 years ago. I will find it because there's searches that don't show that. What matters to me, however, though, is what your habits have been after the bankruptcy. File multiple bankruptcy, or are you still missing payment even years after your bankruptcy, or do you have more of a good track record after the bankruptcy? So I'm looking more on that at your track records and what you're doing after you file bankruptcy, because I understand things happen. And bankruptcy might be a way for you to get out of some really serious trouble, and I want to understand that story. But what you do after is more important to me than the bankruptcy not being on your credit report, because there are searches that we do as lenders that show your entire life history.
So Osiremi, tell us again what type of clients you work closely with.
So I work a lot with small business owners.
Small business owners.
Making small business loans
Okay.
from businesses that are in their infant stages, pure startups, looking for money to start, or businesses that are looking to grow.
Okay.
And I cover the entire gamut, from making micro loans again, from as small as $5,000 to as large as $5 million, using all different type of products, SBA guaranteed loans, conventional loans, and creating loan programs as well in low income communities.
Okay, let's put your information in the chat as well, Osiremi. I'm sure that there's some folks online or who will watch this video later who will say, I'm a small business owner, or I'm a new small business owner, and I want to be able to leverage some monies. And so let's go ahead and you put your information.
I just dropped my email, I believe.
Okay, yep, it's in there. All right, those who are listening, Derek's information is there, united-credit.org, and then you can also reach Osiremi at the email that he provided there as well. Another question from the chat. Ronnie says, the only bad item on my credit report is student loans that she co-signed for her daughter. Will her report change once all those loans are paid?
That's a direct question.
Repeat that one more time.
Yep. The only bad item I have on my credit report is student loans I co-signed for my daughter. Will the report change once all those loans are paid?
They're still going to be there. I mean, the only way that something can get deleted is if it's actually disputed and the bureaus can't verify it. So the key is if you got any derogatory notations right there, it will stay there. So we got to make sure we manage that part.
Okay, so let me ask you this. How does the score increase if the payment has already been paid off? Then does the person dispute it?
Actually, if there hasn't been any negative payment history, they're fine. It's all good. But if it's some negative derogatory notation and the balance is zero and it says paid as agreed, you good. If it says settled debt, most people work out settlements. So you got a $500 credit card, you settle for $200, that won't show as paid as agreed. It's going to say settled debt. And so that settled debt for amount less than what you owe really hurts you. We got to get that stuff off. Typically, if you work out a settlement arrangement with somebody, you want to try to negotiate. If you settle for $250 on that $500 debt, that they report it as paid as agreed. Because otherwise, a settled debt really, even though it's paid, it still kind of hurts you. Because again, if I'm looking to loan you money and I see you borrow money from other people and you ain't even paid them in full, and I can see that visibly, it's going to kind of stain my perspective of your responsibility. You know what I'm saying?
And to add to that, if they're federal student debt, my advice, and I'm begging, please keep up with your payments. Or if you can't pay them, there are options. There are deferments, there are forbearances. Try to get on those. Give them a call and see what you can do. Income-based repayment, but try not to owe the federal government money. It's just not good.
Yeah. And speaking of federal, I do have some friends, Osiremi, who have federal student loans and those who have private student loans. Now that we've been going through this COVID-19, I've heard that federal loans have kind of been placed on the back burner. But what are people who have private student loans? How can they get assistance maybe during this time where their credit is not rudely affected?
Well, start with a call. You have to call them, ask for deferment. And that's where it starts. It really is. I mean, I have borrowers that did not pick up the phone call. And when I, try to, the scheduled payment on August 1st, that bounced. But pick up a phone and call me and have the conversation. Let me know what's going on, and we can negotiate something. If it's a deferment for a couple of months, most lenders are offering that, private or federal. But have a conversation and try to negotiate and negotiate down your payment to what you can afford. And most lenders will work with you. And the ones that do not, try your best to refinance out, and use all the lenders, to take them out, so you can have a better relationship.
Okay. All right. Derek, also, let me talk a little bit about like what is considered good interest rate, what is considered a bad interest rate. Like, I don't know that everybody knows when they hear interest rate whether they should say, you know what, this is not something I should take on, or this is actually something that I should take on. So talk about that for a minute.
I mean, that's kind of relative, right? Obviously, if you're going to buy a car, man, you're going to buy a car. If you got decent credits, you're probably paying less than 3-4%. Same thing. I mean, now mortgage interest rates are extremely low. 3-4% is pretty solid. I mean, credit cards, if you kind of floating in that 8-12%, I mean, you're doing okay. Obviously, most people that have challenged credit paying 18-21% on car notes, on credit cards. I mean, and so when you really start to do the math, I mean, they really banging you over the head. So again, bad credit is very, very expensive. If you have great credit, man, your premium on your automobile insurance comes down, your interest rates on your credit card comes down, your mortgages come down. I mean, so when we talk about financially, when you really look at the cost of having great credit, you just save so much more money, man. So we really got to look at the calculations and see what really makes sense. And at the end of the day, you will always win with having excellent credit because the cost savings is just amazing.
No, I completely agree. I was actually doing an exercise today, with my amortization table, to calculate what the cost of a $30,000 auto loan would be if you had an interest rate of 7% versus 10%, and the difference is about $7,000 is what you save, over the life of a 7-year loan. So that's huge. That's a lot of money that you can save by having decent credit, and the change in interest rate. So the interest rate is the cost of borrowing. If you borrow a 10%, borrow $30,000 at 10% for 7 years, it'll cost you around $13,000 to borrow. If you had decent credit and it's at 3-4%, you're saving $8,000. That's a lot of money. Just having good credit. So you got to put it in perspective. And I agree with Derek. It's relative. It depends on what type of money you're borrowing. If it's an auto loan, if it's a student loan, if it's a small business loan, and what the industry is offering. But yeah, I agree.
You both talked about having your credit score checked. Talk about where, because there's so many sites, so many websites that say we'll provide you a free credit report, or other sites that say pay this amount of money and you can get your credit score, right? So talk about which sites are reputable. And then part 2 of that question is, how do you read your score? Because just because you may got a score from Credit Karma, I've heard that you can go into a bank loan and they tell you, well, no, that's not your real score. So how is it that you can get a score offline and then be told by a lender that that's not your real score? Talk about that for a minute.
Man, there's a difference between, if you're going to purchase a home and looking at that score versus you going to buy a car or try and buy a couch or a bedroom set from Macy's. It might just be a different scoring model system that they use. In the same way, if you're going to get automobile insurance, they're doing the soft pool and they're going to rate you A, B, and C, so it may change. But some great platforms to really help you have an accurate picture of your credit profile. I like ScoreSense, SENSE, ScoreSense.com is pretty good. Identity IQ is pretty good. That's another real good one. You can get one free credit report per year at annualcreditreport.com. Annualcreditreport.com. You get one free one per year. But those two are pretty solid. I think they're pretty accurate. I'm really not a big fan of going to Equifax, Experian, TransUnion, and getting their credit monitoring programs because they're a little biased on their side. It might be a little fluff added to it. You think you're looking at a number that's really not a number. And so I would try to, go ahead and use, ScoreSense or Identity IQ.
And the only thing I can add to that is utilize your banks as well. It's 2020, and a lot of banks are actually offering your credit report just through their app. You don't have to pull anything. It's available to you. I use Chase, and I'm able to see my credit report literally every single day and every month. And all of my activities are noted in there on a monthly basis. So some banks might offer that through their app, where you can actually see it on a daily basis and you can monitor that.
Okay. Yeah, and I'm just going to repeat those because someone in the chat asked to repeat what you said, Derek. ScoreSense, Identity IQ, and then annualcreditreport.com. You can get one free report each year. Derek, you also mentioned that the housing algorithm is different from the car algorithm, which is different from maybe a line of credit algorithm, right? Is that anything that the regular consumer should know about going into it? I mean, because I think that there's a lot of misinformation and people get confused by all of this.
I mean, it really just depends. Listen, I say to prove yourself worthy, man, just work on fixing your credit. I mean, think about this. If you walked out your house, right, and it was a halo over your head with a credit score in it, and everybody could see you walking around with a 520, 530, 560, like you would carry some level of being ashamed or embarrassment. Like, I think if you do have challenged credit, you got to address it before it addresses you. Most people wait till their car break down, gotta go buy a car, then they get denied, like, dang, I gotta fix my credit. Most people wait till their lease is up September the 1st and dang, I gotta move and my folks selling the house. Let me just go get fit. But like you gotta be proactive and not reactive. We're in a society where we so reactive when stuff break down, then urgency kick in. Like you gotta be urgent right now. And so I challenge you out there, if you have challenged credit, like you gotta fix that stuff. You gotta take personal responsibility and do something about it. You can't just sit back and just be on the sideline, because keep in mind, people make decisions about you based on that score. I remember I had a couple years ago, I had a little mole on my face, kept growing a little bit, growing back. And I went to a dermatologist and I was a new patient. And when I filled out a new patient application, I asked the young lady at the front desk, do I got to put my social on the application? Mm-hmm. And she like, yes, you do. And I'm like, well, why I got to put my social on here? Are y'all pulling my credit? And she said, yes. And I said, well, why? She kind of like in a little whisper voice, she said to me, this helps us to determine your ability to pay in the event that your insurance company don't pick up the cost. So think about that. And then you can go have a seat. So while I'm sitting there, they've already prejudged me based upon whatever came back as far as my credit rating. And that determines whether or not when I go back there to see him, how he's going to service me based on that. Right. If he saw a 520 credit rating come up when they did their due diligence, now he's back there looking at me. You think he's going to give me the top of the line service that I need to get this mold off my face? If he know the insurance only going to cover a percentage, or is he going to say, you know what, based upon that, we probably going to need to do this. It's the cheaper option, because he probably looked at my credit and say that we ain't even going to put him in no situation where he owe us. You see what I'm saying? Yeah, so all those little things, man, we don't really think about the ramifications of our challenged credit, but we really need to.
Yeah, that's real talk. Let's switch gears just for a second, also, Remy, because you deal with small business owners. Talk a little bit about the need for personal credit to establish business credit, and then when you can just start using only business credit and not your personal social security number.
Well, yeah, to answer your second question, when you can start to only use business credit is when you're in middle market. If you're a small business owner generating revenues under $30-40 million, your personal credit is more important than your business credit. That's just the honest truth. Okay. Frankly, we pull business credit in small business lending, but it is so irrelevant because it is so inaccurate. Not every vendor reports. So it's hard for us to gauge. You might have a bad relationship with a vendor and that vendor reports, and you might have 20 good relationships and none of them report. So it really doesn't give us a gauge and tell us the full picture. So we will focus on obviously your business and your revenues and your cash flow, but on the personal side, we will focus on your credit. And in small business lending, the number is usually around 620 or 640. Anything above that is usually good. Anything below that will keep you out of a lot of loan options. It really will. I'm in alternative lending, which is right below the banks. We compete with the banks, but we're right below the banks, and we lend to businesses that have sometimes challenging credit scores. But it is equally as important as running a good business. I mean, you have to have good personal credit. That is very important. I don't know of any situation where I have not taken into account personal credit history of the individual running the business. You can only separate from that, not in a legal term, but in a lending term, when you're in the middle market. That's where you're borrowing hundreds of millions of dollars.
Yeah.
If you're borrowing anything less than $5 million, you're going to need to show good credit.
Derek opened up by talking about things we can do with our personal credit, automobiles, homes, timeshares, et cetera, et cetera. Also, I mean, what things can we as consumers who have businesses do with business credit?
Ask your vendors to report. You have good relationship. Ask them and please beg them to report to the credit bureaus. Right?
But not just report. I was saying, what can you do with the business credit? Like with the personal credit, right?
Yep.
You can establish yourself in purchasing a home, getting an automobile. But what is the purpose? What are the purposes of having business credit?
And that's what I was saying is it's people make it this thing that is that important. In my opinion, it's not. I haven't ever declined a loan because of bad business credit. Just because it's so inaccurate. That's just my opinion on it. It's very inaccurate because again, not all your vendors will report. So how can I take into effect one vendor is reporting to make a decision on your business? It's just hard to do. And I've worked for 3 lenders now, and not one time have I underwrote a loan of any size and taken solely into effect the business credit. You can build business credit by having credit cards and again telling your vendors to report, but I'll focus more on the personal side than I will on the business side. I would mention that there are items on your business credit report that will be alarming to me, such as bankruptcies, such as liens. If you owe taxes, state taxes, federal taxes, they will file liens on you, and UCC filings, which tells me how many loans you have, lines of credit, credit cards, and business loans as well. All of those things will take into effect, and those are reflected on your business credit. But outside of that, it's not as important. Personal credit still wins in small business lending. When you get to middle market, then those are the bigger players. And unless there are any folks on here that run hundreds, billion-dollar companies, we probably should have.
Yeah. So there was a question from the chat, and they're reading my mind as well. Ebony asked, "So, what is the purpose of having business credit if they don't report it to the credit score?"
Right, because I know you get the solicitation from Duns and Bradstreet, which a lot of people we pull those reports, but we only do it because we're required to. On the back end, it's not that important. It's just not.
So businesses that purchase cars and purchases homes using the business instead of their personal, right? Mm-hmm. What does that protect them in some way by having a car or a home or an apartment or whatever in the business name as opposed to having in their personal name?
Legally, yeah, it does. It does protect you legally because that's what a corporation, it protects you legally when you get sued. Your assets are protected. But if I was to make a business loan if I was to make a loan to a business to purchase a property, there is an individual behind that business. There is an owner that needs to guarantee the loan. So your personal credit will still be considered and will be considered even higher than your business credit. Outside of your business cash flow and your business ability to generate income and pay me back, there is still an individual that is controlling this business. This LLC is just a legal term. There is still an individual that is making decisions on behalf of that business. So as such, I will want to know who's behind that curtain. Who's that person that's making the decision and writing those checks? That is equally as important to me as anything on your business credit report, if not more.
Yeah. And if you're tuning in this week listening, we're talking about establishing your credit. This entire month of August, we're going to be talking about economic empowerment in our community. Next week, we'll be talking about home ownership. And I'm glad that Derek talked a little bit tonight about the importance of establishing credit when you're purchasing a home. The week after, we'll talk about retirements. We'll talk about stocks. We'll talk about investments and our ability to, again, the word we used earlier was leverage the money that we're making. Just because you're putting money into a savings account, if it's not bearing any interest, then your money is not doing anything for you in that account. You need to put your money to work. And so we're going to talk about that here in a couple of weeks. But before we close out, I do want Derek, you and Osarumi to kind of talk a little bit more about how to restore credit. Like you talked earlier about maintaining good credit. Now let's just shift just for a second. I can't maintain bad credit. So if my credit is bad, I heard you with the 35, 30, 15, 10, and 10 scenario. But what other things can they do in the next 3 to 6 months to start seeing increases in credit score?
Yeah, first of all, you want to get them balances down. I mean, that's really more important, man. If you got to grind, do what you got to do. You got to get them balances below 30%. That's important. Secondly, if you want to enroll in the credit repair program, like what we offer, it's kind of like if you commit a crime, you have a right to an attorney, right? And that attorney is not saying my client didn't do it. That attorney is saying, before you guys prosecute my client, you got to verify some information. And so that's kind of how we're acting. We're acting like we're your defense attorney. We're not saying you borrowed money and defaulted on your obligation. We're not saying you bought a Mercedes and you realized you couldn't afford it and it got repossessed. We're not saying that you wasn't late a couple of times. We're not saying that you got an apartment you ain't paid. We're not saying those things are not true. We're just saying, credit bureaus, before you tell the world my business, my client's business, you got to make sure that you verify the date they opened up the account, the amount you said that they owe, the date you said they were delinquent, the address that you got on file, the date they opened up the account. If you can't verify all those things in 30 days, which is the law, you got to delete this from my client's profile and they can walk out of here and enjoy their life to the fullest. And so that's kind of what we do. We just simply hold them accountable, man, for a nominal fee and give people life again, because bad credit cripples people, man. I mean, when you really think about the impact of what it does, like it has to create some level of urgency. Growing up, with a teenage mom, I didn't have a backyard of my own till I bought my first house. And so you think about how many kids are in a situation where they don't experience a backyard and things like that, not because the parents don't make decent money, because the parents have bad credit. And so when you really think about the short-term and long-term impact of not addressing that situation, at some point we got to address it again before it addresses you. That makes sense?
Yeah, that makes sense. Makes perfect sense.
And I agree. I think, picking back on what, I said earlier is pull your credit report, know what's on it, and get in touch with Derek, and find out how you can fight this, and dispute whatever charges are inaccurate on your credit report, and call your creditors if you're not able to pay. If you're struggling to pay, call them, pick up the phone, and have a conversation. There are humans behind the curtain. There are humans behind every loan, and have a conversation. Ask for help, and if you are in a position to pay down your debt, pay down your credit cards, and bring those utilizations down. That will improve your credit score.
Yeah. I'm glad that you both mentioned tonight, don't get over over your head and what you can afford. If you can't afford that car note, if it's going to put you above 30% of what you're making, or it's going to that car note, that house note, I mean, you got to maintain the money that you're making in such a way where it doesn't have you eating up more than half of your check each month. Because if whatever you're paying for rent, whatever you're paying for your car, if it's eating up more than half of what you bring in, more than likely you're putting things on the credit card, because there are emergencies that will begin to arise in your life. And so I think what we heard tonight, everybody who's listening, is to be able to maintain your credit below a certain threshold, so that you can boost your credit score. It's never too late to restore your credit. Know how to reach out to individuals. Derek's company is a great company that helps you to facilitate and navigate through those muddy waters, because this is not information that we knew coming out of the womb. Most of us didn't go to school to learn this information. Osarimi has a background in finance. Most of us don't have backgrounds in finance, right? So it's so important that we as a community reach out and stop being afraid, stop being nervous, stop being shy about saying that, hey, I had to file for bankrupt, or hey, I missed a couple of payments, right? When you pick up the phone and make that phone call, tell the whole story, right? If you don't tell the whole story, the person on the other end trying to help you cannot help you in the best way that they can, right? And so it's time for us to be more honest about where we are in our situation so that we can get the help that we need. I appreciate you, Derek. I appreciate you, Osarimi, for all of the information that you guys shared tonight. The chat box is going off. There's a lot of people who are just super excited to hear you guys talk about establishing credit, how to restore credit, the importance of credit information. You help somebody who had a bankruptcy, someone who had some loan information. Several people have texted me and said they want to reach out and talk about restoring credit. So I appreciate just the two of you really kind of hammering home the importance of credit. Those who are tuning in, listen to us next week. Will be on Thursday of next week. And then following that, we'll be back to Tuesday. So moving forward, we'll be all Tuesdays next week. Our guests who are coming on to talk about home ownership, the importance of owning a home, the importance of having an asset, because most of us do not have assets, and it's important that we have assets. So thank you all tonight for joining. We look forward to having you back on next week as we talk about home ownership. Derek, once again, thank you. Osremi, it's great to have you on the call.
Not a problem. Thank you so much. Have a good night.
Thank you, brother. Appreciate you guys.
Mm-hmm.
All right.